Well, yes, Macquarie, apart from the fact that the MSP has increased, they're saying that is pretty much in line, but they're also saying that the focus now moves on the budget side, and they're expecting that there could be some reduction in personal taxes, which inform could boost consumption in the country, not only in the rural market, but also, more importantly, in the urban market. And because of this, they have actually removed Jubilant Food, which was earlier a part of their marquee sell list, and they have removed that from the marquee sell list because they're expecting some kind of an upside maybe from that. And they're also saying that they're preferring HUL, Titan and Asian Paints. On the other hand, JP Morgan has come out with this big note on the consumption sector, and they have listed out 10 different points why they are bullish on the sector. Firstly, they are saying that though demand recovery was slow in staples and mass discretionary, they're expecting a pickup in FY25. They're also expecting modest margin gains going forward. They're also saying that premiumization and portfolio expansion is the focus, which is a positive for the sector going forward. On the overseas market of the FMCG companies, they are saying that deployment is now limited and more focus is now towards the domestic market. And they're also saying that the valuations now, if you see the relative valuations, are now close to long-term averages, which suggest a potential upside for these stocks also on the valuation side. Now, they've also given a host of stocks that they would prefer investing. Firstly, they're saying stocks like Asian Paints, Tata Consumers, Jubilant Food, United Spirits, these are stocks that are buy on any dips. They're saying Nykaa, Adani Wilmar, Britannia and Honasa are key avoids, and Crompton Creeves Consumer and Colgate are a couple of stocks that one should keep on the sidelines. Now, when it comes to compounding earnings growth, they're saying Avenue Supermarts, that is DMart, Titan, Nestle, Pidilite and Havells are compounding growth stories even from here on. And when it comes to valuation side, HUL and Godrej Consumer are a couple of stocks where they're seeing that the risk reward is kind of attractive at this moment. So, Street is now getting again a renewed interest that we are seeing when it comes to consumption space currently.
The basic comeback in the market is centered around the fact that we will have a good monsoon, we will have things coming up on the budget side, and consumption revival should happen. Now, forget what brokerage is saying. I mean, the Reserve Bank of India governor actually, who's got the most insight in terms of where the economy is moving, he's confident of the rural recovery coming back. And I personally feel that this time around, if rural recovery is coming back, I don't think you should go back to consumer staples. I think the case for two-wheelers doing better than consumer staples, the case of small ticket discretionary doing better than staples, the case of semi-luxury doing better than staples, I think that is where it is. I think while brokerages are catering to institutional clients, I think our viewers, they must realize that consumption will make a comeback if we have a good monsoon and if there is a fillip from government, which will come after the election verdict. Everybody is aware of the fact that the rural economy is under stress. But I think the way to bet on consumption really could be not by consumer staples, it really could be consumer discretionary. And that's where I would think that, maybe it is better to look at a Titan or a Hero MotoCorp or a Bajaj rather than looking at HUL and Asian Paints.